Welcome to this week's market review, where we dive deep into the candlestick patterns that shaped the U.S. equities landscape. Buckle up as we uncover the bullish breakouts, bearish reversals, and everything in between that drove sector performance. From tech's impressive rally to utilities' potential correction, we've got the patterns you need to know. Let's jump right in. U.S. equities continued their record-setting push this week, with technology and select communications names leading the charge. The technology sector in particular showcased an impressive performance, gaining almost 8% and adding a staggering $57 billion to its market capitalization. Software and IT services sub-industries were the primary drivers, each posting increases of around 8%. Meanwhile, hardware and storage weren't far behind, with a weekly return of approximately 7%. The technology sector's strength was evident in its candlestick patterns, forming a bullish continuation pattern that suggests the current uptrend is likely to persist. This positive signal indicates that buyers remain in control and are actively pushing prices higher. In fact, the sector has demonstrated strong momentum for quite some time, and there's potential for new highs in the near future. Diving deeper into the candlestick structure, we observed a high frequency of bullish engulfing and hammer formations, especially in mid and small-cap tech stocks. These patterns signal strong institutional accumulation and reinforce the potential for a continued uptrend. The prevalence of these bullish setups was particularly notable in the daily charts, as well as 15-minute and 30-minute intraday readings for active sectors. Moving to the communications services sector, we saw bullish continuation setups reflected in multiple Marubozu and Morningstar candles. These patterns were concentrated in undervalued midcaps, driving strong retail and fund inflows. The sector's positive momentum was further bolstered by the resolution of regulatory headwinds for key players like Alphabet, contributing to the sector's 7% discount to fair value and attracting positive capital flows. In contrast, the utilities and energy sectors displayed some concerning signals. High counts of hanging man and bearish harami patterns, especially in top-cap stocks, warned of overvaluation and heightened correction risk at sector highs. These bearish reversal signals were particularly prominent in large-cap names, suggesting that investors should exercise caution in these areas. The financial sector presented a more neutral picture, with a high frequency of doji patterns on daily charts pointing to indecision and defensive trading. This uncertainty may be linked to anticipation of macro catalysts, such as the upcoming FOMC meeting. Investors should keep a close eye on how these patterns evolve in the coming days. Turning to basic materials, we observed moderate growth, with a strong bullish engulfing pattern forming midweek. This positive signal led to a 3.8% sector cap gain, translating to a market capitalization change of $28 billion. Notable performers in this space included Newmont and Agnico Eagle Mines, which posted strong gains and contributed to the sector's overall positive momentum. The real estate and healthcare sectors showed resilience, with bullish harami patterns emerging, especially in mid-cap health and real estate stocks. These formations signal sturdy bottoms and sector resilience, suggesting potential opportunities for investors looking for stability in their portfolios. Industrials presented a mixed picture, with a distribution of doji and evening star patterns reflecting shifting capital between infrastructure, logistics, and aerospace subsectors. This diversity of patterns indicates that investors should carefully analyze individual stocks within the sector rather than making broad sector-wide decisions. Consumer cyclical and defensive sectors also displayed mixed candlestick patterns. Consumer cyclicals showed more bullish setups, particularly Morningstar's, while defensives experienced doji lead uncertainty. This divergence suggests that investors may be favoring growth-oriented consumer stocks over their more defensive counterparts. Interestingly, we're seeing an increase in breakout setups among private companies, particularly in emerging tech and mid-market industrials. Morningstar and bullish engulfing patterns are becoming more prevalent in this space, potentially signaling attractive investment opportunities for those willing to look beyond public markets. When we analyze the bullish versus bearish patterns by capitalization, we see a clear trend. The highest concentration of bullish patterns is found in mid and small-cap stocks, particularly in the technology, communication services, basic materials, and private company tech sectors. These persistent bullish engulfings and hammer setups reflect an undervalued status and robust demand for these stocks. On the flip side, the highest concentration of bearish patterns is observed in large-cap utilities and energy stocks. The numerous hanging men and bearish harami formations in these sectors signal overvaluation and a risk of correction at high capitalizations. From a valuation perspective, several sectors stand out as potentially undervalued. In the technology sector, several widely held mid and small cap names are trading 7 to 10% below their intrinsic value according to sector models. The communication services sector, especially in the mid-cap range, shows pronounced undervaluation, particularly after the resolution of regulatory headwinds for companies like Alphabet. Real estate is another sector that appears attractive, with large and mid-cap capitalizations boosted by a dovish rate outlook and growing institutional exposure. These factors combine to create potential opportunities for investors looking for value in the current market environment. On the overvalued side, large-cap utilities and energy stocks are technically overbought. With a high concentration of bearish reversal setups and sector valuations above their historical mean, financials and defensive sectors are treading close to fair value with minimal discount and increased indecision, warranting caution from investors. To illustrate an undervalued stock opportunity, let's look at minerals technologies in the basic materials sector. With a market cap of $2.25 billion, this company displays classic undervalued fundamentals, including improving profitability and recent strong earnings. The stock's candlestick pattern suggests an actionable swing entry for investors seeking exposure to the materials space. It's important to note that our analysis utilizes both daily bars and high-activity intraday candles, focusing on 15-minute and 30-minute intervals for the most actionable signals and reversals. Sector and index leaders are confirmed by daily closes to ensure the reliability of our observations. As we wrap up this week's sector review, it's clear that the market continues to present a diverse range of opportunities and risks. The technology sector's strong performance and bullish patterns suggest continued momentum. While large-cap utilities and energy stocks may be due for a correction, investors should pay close attention to these candlestick patterns and sector trends as they make their investment decisions in the coming week. Remember, while technical analysis provides valuable insights, it's always important to combine these observations with fundamental analysis and broader market context. Stay tuned for our next update, where we'll continue to uncover the patterns and trends shaping the market landscape. Till then, the information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.